Did this guy just figure out how to print free money?
We're making 500 million a day. I'm staring at my screen and we're selling dollar bills for $3, sometimes a million times a minute.
This is Michael Saylor, and he's the founder of a company called MicroStrategy. Saylor's net worth has soared to more than $10 billion this year, making him one of the 250 richest people on the planet. But Saylor's rise into the upper echelons of wealth has come with a lot of controversy. Recently, he's claimed that his company MicroStrategy is the most profitable company in the world, that is making $500 million per day, more than Apple, Amazon, Microsoft, or any of the other mega tech companies that we're all familiar with. Not only that, Saylor claims that he and MicroStrategy are just getting started, and that every company in the world and every person in the world needs to copy his strategy or else they'll be left behind. Is there any truth to this, or is this all just a big scam? Judging by what's going on in the stock market, investors seem to be believing what Saylor is saying. MicroStrategy stock has been going through the roof. It's now valued at $100 billion, up from just $10 billion at the start of the year. So what's going on here? Has Saylor really created a perpetual money machine? That is what I'm going to talk about today. First, let's lay out what MicroStrategy actually is. Founded in 1989, MicroStrategy originally developed software for business intelligence. Interestingly, the company was a big winner during the internet bubble of the late 1990s. When that bubble peaked in the year 2000, MicroStrategy stock traded at crazy high levels, and Michael Saylor's net worth reached $7 billion. But the bursting of the internet bubble and an accounting scandal at MicroStrategy caused the stock to plummet, and with it went Michael Saylor's net worth. That's ancient history now, but it gives you a little bit of context about the types of ups and downs that Michael Saylor has seen during his career. Now, in the 20 years after the internet bubble burst, MicroStrategy continued to trudge along and sell software. In those years, it was a relatively small company by the standards of publicly traded companies, with a market value of around $1.5 billion. But that changed in 2020 when MicroStrategy began a dramatic transformation. In August of that year, it became the first publicly traded company to purchase Bitcoin. Using cash that it had in the bank, MicroStrategy bought $250 million worth of Bitcoin at an average price of around $11,650. That, it turns out, would be the first of many Bitcoin purchases by MicroStrategy. At the time of the first purchase, Saylor said that his company was buying Bitcoin because it was digital gold, a new form of money that would protect against inflation and provide upside to early investors. Very quickly, he seemed to be proven right. Inflation accelerated and Bitcoin prices rocketed higher in 2021. And all throughout that period, MicroStrategy continued to purchase Bitcoin aggressively. And not just with cash that the company made from its software business, but with additional funds that the company raised from investors also. These funds enabled MicroStrategy to buy much more Bitcoin than it would otherwise be able to buy. The first of these capital raises came in December of 2020, when MicroStrategy raised $650 million by selling convertible bonds. To put that in perspective, that $650 million was more than the total cash that the company had generated in the previous decade. So by raising money from investors, MicroStrategy was able to amplify its firepower to a huge degree. This continued for a while. MicroStrategy would raise money through stock and bond sales and use the money to purchase Bitcoin. And as this went on, MicroStrategy's name recognition continued to grow and its stock continued to surge. You see, these purchases were taking place amid a huge bull market in crypto. Between August of 2020, when MicroStrategy made its first Bitcoin purchase, and November of 2021, when Bitcoin prices reached a multi-year peak, the company had purchased 114,000 Bitcoins at an average price of $27,713. When Bitcoin reached its high, it was trading at around $68,000, meaning that MicroStrategy had more than doubled its investment. Its 114,000 Bitcoins were worth just shy of $8 billion, a gain of $5 billion for the company. Things were looking incredible for MicroStrategy and Michael Saylor at that time. The stock had increased tenfold from where it traded prior to MicroStrategy buying Bitcoin, and it seemed like nothing could go wrong. But a few months later, everything changed. In 2022, financial markets plunged as the Federal Reserve hiked interest rates dramatically to combat inflation. In turn, the price of Bitcoin crashed. The implosion of the crypto exchange FTX compounded the problems of the crypto industry, and by by late 2022, the price of Bitcoin dropped 77% below its highs, reaching a low of $15,600. All of a sudden, MicroStrategy's big bet on Bitcoin was looking downright foolish. The company was now losing money on the Bitcoins that it had purchased, and the stock price reflected that, with shares down nearly 90% from their highs. At the time, there were legitimate concerns about not only MicroStrategy's ability to continue executing its strategy of investing in Bitcoin, but its ability to survive at all. Remember the $650 million worth of convertible bonds that MicroStrategy sold in December 2020? If crypto markets stayed depressed, then MicroStrategy would be on the hook to pay those back. I'm going to talk more about convertible bonds in a bit, but they are essentially what people call hybrid securities. If MicroStrategy stock is high enough, the bonds get converted into stock, and the money the company raises by selling them doesn't need to be paid back. But if the stock price is low, then the bonds need to be paid back like any other form of debt. When Bitcoin crashed back in 2022 and MicroStrategy stock was in the dumper, the convertibles were acting more like debt. There was the expectation that they'd probably have to be paid back at some point. Fortunately for MicroStrategy, the maturity date for the bonds was December of 2025. So the company had plenty of time before it would have to come up with the money. Bitcoin bottomed out in late 2022, so there was almost 3 years before these bonds would mature. That gave Saylor and his team much needed breathing room. So rather than panic when Bitcoin prices plunged, they were able to hunker down and stick it out. They didn't buy much Bitcoin in 2022, but as cryptocurrency markets started to recover in 2023, they started to buy up Bitcoin again. MicroStrategy bought $1.9 billion worth of Bitcoin in 2023 and another $4 billion worth of Bitcoin during the first 9 months of 2024. In other words, Michael Saylor and his company survived the crypto winter and came out stronger on the other side. And that brings us to the present day, when things are getting really insane. Over the past few weeks, MicroStrategy has absolutely turbocharged its Bitcoin purchases. On November 11th, it announced that it bought $2 billion worth of Bitcoin. A week later, on November 18th, it announced a $4.6 billion purchase. And a week after that, on November 25th, it announced that it bought another $5.4 billion worth of Bitcoin. In other words, in just the span of 2 weeks, MicroStrategy bought $12 billion of Bitcoin. In terms of dollar value, that's more Bitcoin than the company bought in the previous 4 years combined. The crazy part about all this is last month, MicroStrategy unveiled this really bold plan to raise money from investors to purchase $42 billion worth of Bitcoin over the next 3 years. That was already a huge, almost unbelievable amount of money to raise in just 3 years. But now we see that the company has raised almost a third of that in just 2 weeks. These massive numbers have really excited investors, and it's the reason that MicroStrategy stock has skyrocketed in recent days, pushing the market cap of the company to nearly $100 billion. In fact, the excitement has grown to such a level that MicroStrategy is now valued at nearly 3 times the value of its Bitcoin. You heard that right. While MicroStrategy's market cap is $100 billion, the value of its Bitcoin is currently $36 billion. This big gap is why MicroStrategy is such a controversial stock. Bears argue that the stock is way overvalued, while bulls say that the premium valuation is justified. So let's look at both sides of the issue to see who's right. And I want to start with those claims that I mentioned earlier in this video that Michael Saylor made. All that talk about how MicroStrategy is the most profitable company in the world, making $500 million per day. I'm going to be honest with you, that claim is extremely misleading. It's based on the fact that MicroStrategy bought a bunch of Bitcoin over the past few weeks, and since it bought them, the price of Bitcoin has gone up. Anyone can go out and buy an asset, whether it be a stock or a cryptocurrency, and make some quick money. Those are investment gains, and they're not in any way equivalent to the operating profits generated by companies like Apple and Amazon. For Saylor to characterize them in the way that he did is hyperbolic nonsense. So that claim is ridiculous, but there's other claims that we should look at as well. We know that MicroStrategy's aim is to buy Bitcoin and profit from the rise in Bitcoin's price over the long term. I admit, it's a strategy that's worked well for the company. But Saylor often uses a bunch of jargon to make it seem like MicroStrategy is doing much more than just buying Bitcoin, that is doing something really special to create shareholder value. He's talked about how MicroStrategy is powered by a quote Bitcoin reactor that makes money by stripping the volatility off fixed income securities and transferring it to MicroStrategy stockholders. Jargon aside, the crux of his thesis is based on this metric which he calls the BTC yield. And what that is essentially is an increase in Bitcoin per share over time. Let me put it more simply. When you go out and buy MicroStrategy stock, you own a certain number of shares. At the same time, MicroStrategy has this big pot of Bitcoin that they've purchased over the years. Each of your shares represents a portion of this pot. For instance, today each share of MicroStrategy represents 0.001451 Bitcoin in the pot. Saylor says that over time, he can increase the number of Bitcoin that each share represents. And because of that, MicroStrategy is a good investment and deserves to trade at a high level. The problem is, yes, Bitcoin per share has been increasing and could potentially continue to increase. But that's only because new investors are buying shares at such a high premium. Let me give you an example with nice round numbers to make this clear. If there are 100 shares of MicroStrategy outstanding and MicroStrategy owns 100 Bitcoins, then each share represents ownership of 1 Bitcoin. Let's say the stock price of MicroStrategy reflects this with no premium in the shares. If Bitcoin is trading at $100,000, then in this scenario, MicroStrategy stock is also trading at $100,000 because 1 share represents ownership of 1 Bitcoin. But now let's say that investors in MicroStrategy go crazy and they bid up the stock so that it has a 200% premium. In this case, MicroStrategy stock trades at $300,000. If the company goes out and sells 100 shares, it can raise $30 million at that price. With that $30 million, it can turn around and buy 300 Bitcoin at a price of $100,000 each. Now let's look at the situation. MicroStrategy owns 400 Bitcoins and there are 200 shares outstanding. That means that each share represents ownership of 2 Bitcoins up from 1 Bitcoin before. What's changed? Each share represents ownership of twice the Bitcoin as it did before, but is this magic? No, the investors who bought MicroStrategy at a premium price boosted the value of all of the existing shares. It was a transfer of value from new buyers of MicroStrategy stock to earlier buyers of MicroStrategy stock. So this is essentially what's going on here. There is no free money, there is no free lunch. It's simply a transfer of wealth. There's another aspect to this that I should cover as well because Saylor talks about it a lot. And it's this concept of selling volatility. You see, MicroStrategy has historically raised money from investors in 2 ways. One is through the sale of common stock, like I outlined in my example, and the other is through the sale of convertible bonds, like those convertible bonds I mentioned earlier in this video. Convertible bonds are hybrid securities. You can think of them like a bond, which is a type of debt, combined with a call option. If you're unfamiliar with call options, they're a type of security that entitles you to buy a stock at a particular price, the strike price, at or before a particular time, the expiration date. A call option has value because the price of the stock in question could rise above the strike price before the option expires. It's great if you have a call option that grants you the right to buy a stock at $100 if that stock is trading at $120, for example. Anyway, the more volatile a stock is, the more valuable a call option is, because there's a higher chance that the stock will rise above the strike price. So in the case of MicroStrategy, the stock is extremely volatile. It moves up and down crazy amounts every day, which makes its call options extremely pricey. MicroStrategy has taken advantage of this by selling convertible bonds, which, like I said, have call options embedded inside of them. They're usually structured in a way like this. The holder of the bond gets a small amount of interest or maybe even no interest. In exchange for the low interest rate, the holder of the bond gets the option to purchase MicroStrategy stock at a price that's 50% above the current stock price of the company. So if MicroStrategy stock goes through the roof, that's great. The bonds get converted into stock and the holder profits that way. But if the stock goes down or fails to reach the conversion price by the time the bond matures, then it's never converted into stock and the money is paid back just like any other bond. With convertible bonds, the upside is unlimited while the downside is limited as long as MicroStrategy has the money to pay them back. Now, in reality, many of the buyers of these bonds are hedge funds who use a strategy called convertible arbitrage. They're not betting on the stock going up. They hedge their bets by shorting the underlying stock. But that's beside the point. The main thing to understand is that convertible bonds are hybrid securities that MicroStrategy is selling selling in order to raise money to purchase Bitcoin. And just like when it sells regular common stock, there is no free lunch. In the case where MicroStrategy stock rises significantly, convertible bonds turn into stocks. Now granted, Michael Saylor would argue that with convertible bonds you get more bang for your buck, because while they do turn into stocks in many cases, that conversion happens at a much higher price. If you sell common stocks, you usually sell them at the current market price of the stock. But with convertible bonds, the conversion price is usually much higher than the market price, something like 50% higher. So in my earlier example, it would be like MicroStrategy selling shares at $450,000 rather than $300,000. Anyway, yes, that is all true. There are advantages of selling convertible bonds, but there are downsides as well. By selling convertible bonds, MicroStrategy is making a trade-off. The company is potentially able to sell its stock at a higher price, but at the risk of not being able to sell any stock if the stock price goes down. If the stock price doesn't exceed the conversion price by the time the bonds mature, then the convertible bonds must be repaid. That is a risk, and it's a trade-off, not a free lunch. I mentioned earlier in this video about how back when Bitcoin crashed in 2022, there was all this concern about MicroStrategy not being able to pay back its convertible bonds. This is what I was talking about. Fortunately for MicroStrategy, Bitcoin prices didn't stay down for very long in 2022, and so the company didn't have to worry about those convertible bonds which were set to mature in 2025. Since then, obviously MicroStrategy stock has gone way up, and those bonds have long been converted into stock, so they won't ever have to be paid back. But that same situation could arise in the future if Bitcoin crashes again. And there's no guarantee that things work out as favorably for the company the next time around. MicroStrategy has been smart about spacing out the maturities of its bonds so it doesn't have to pay them all back at once at a very inopportune time. The next bond maturity that it faces is in February of 2027, so a little over 2 years from now. The worst case scenario is for Bitcoin and MicroStrategy stock to crash around that time. If that happens, then the company might have to quickly come up with $1 billion to pay the bonds back, either by selling some of its Bitcoin holdings or by selling stock at depressed prices. But the worst case scenario isn't the only downside scenario that investors in MicroStrategy have to be wary of. The stock is tied extremely closely to Bitcoin. This is for obvious reasons. The vast majority of the company's value comes from its pot of Bitcoins. MicroStrategy's software business is probably worth $1 to $2 billion, a small sliver of the company's $100 billion market cap. So if Bitcoin goes down, MicroStrategy will almost certainly go down with it. In addition to the risk of Bitcoin going down, investors in MicroStrategy have to worry about the premium in the stock coming down as well. Today there is a 3-to-1 ratio between the value of MicroStrategy stock and the value of its Bitcoin holdings. But in 2022, the ratio fell all the way down to 1-to-1. In fact, it was trading close to 1 earlier this year. So those are the two big risks of holding MicroStrategy stock: a decline in Bitcoin and a decline in MicroStrategy's premium. But of course, there's a flip side to all of this also. After all, the stock has performed extremely well this year, rising almost six-fold. Maybe instead of going down, the stock's premium continues to expand. Like I said, today MicroStrategy trades at a value that's 3 times that of its underlying Bitcoin holdings. But who is to say that it couldn't trade at 4 times, 5 times, or even more? Now, that would obviously be a speculative bet to make. But judging from the many investors buying MicroStrategy today, a lot of investors seem willing to make that bet. It's kind of interesting. With Bitcoin, you're guessing what the price of Bitcoin will be. With MicroStrategy, you're guessing what the price of Bitcoin will be, and you're guessing what the premium of the stock will be compared to MicroStrategy's Bitcoin holdings. You could certainly imagine a bullish scenario where the rally continues. Bitcoin rips higher above $100,000, fueling another leg up in MicroStrategy stock, leading Michael Saylor and company to raise another $10 or $20 billion to buy Bitcoin, which pushes Bitcoin even higher, and so on. In fact, this scenario that I just described makes MicroStrategy's role in this Bitcoin cycle different than it was during the last cycle a few years ago. MicroStrategy has gotten so large and it buys so much Bitcoin now that it can actually impact the underlying Bitcoin market in a notable way. That wasn't the case during the last cycle back in 2020 and 2021. Now with the company buying potentially $15 or $20 billion in one shot, that's not negligible, even for an asset like Bitcoin, which has a market capitalization of $1.8 trillion. So this is how I'm thinking about MicroStrategy in the short and the long term. Right now, we are in a Bitcoin bull market. No one knows how long that's going to last. Maybe we go to $120,000, $150,000, or even $200,000. Or maybe Bitcoin has already topped out. I have no idea. But to the extent Bitcoin goes up, MicroStrategy is going to probably go up as well. How much it goes up depends on both the Bitcoin price as well as the premium that investors are willing to pay for MicroStrategy stock. So that's what's going on right now. At some point though, there will be an inevitable crypto winter. Bitcoin's going to drop 50% or more, and MicroStrategy is going to fall even more than that. The crypto bear market will be the riskiest moment for MicroStrategy. If you're Michael Saylor, you don't want to see the crypto bear market take place right before a big batch of your convertible bonds is about to mature. That would be bad because you would have to make distressed sales of either Bitcoin or stocks in order to pay those bonds back. But assuming MicroStrategy survives the bear market, what happens then? After the crash, I think there's two ways this could play out. The bearish scenario is that MicroStrategy's premium turns into a discount. If investors start to feel less enthusiastic about Michael Saylor and MicroStrategy, then they might not want to pay a premium for the stock anymore. You can imagine a scenario where people say, hey, I can buy Bitcoin through a Bitcoin ETF and get one-for-one exposure to the cryptocurrency. Why should I pay extra for MicroStrategy stock? In that case, maybe the value of MicroStrategy stock drops below the value of MicroStrategy's underlying Bitcoin holdings, maybe even sharply below. We saw something similar play out with the Grayscale Bitcoin Trust, otherwise known as GBTC. GBTC is now an ETF, but prior to 2024, it was actually a quasi-closed-end fund. The fund traded at a large premium for many years. That premium eventually turned into a massive discount of as much as 50%. But there's a more optimistic scenario as well, and it's essentially a repeat of what we saw during the last crypto winter. Bitcoin drops, MicroStrategy stock crashes, and the premium shrinks temporarily but starts to rise again once Bitcoin eventually recovers. You could even make a fundamental investment case for buying MicroStrategy at the bottom when the premium is very low. If you buy MicroStrategy stock at a value equal to the value of its underlying Bitcoin holdings, you might feel pretty good about paying fair value for that exposure. At the same time, you have the potential to capture additional upside if there's another mania that sends the premium higher again. Remember, every time MicroStrategy raises money by selling stock at a premium, there is a wealth transfer from investors who bought stock at a high premium to those who bought stock at a low or no premium. So you might want to be one of those investors who's benefiting from the wealth transfer. Speaking of which, you want to know which investor is really benefiting from that wealth transfer? Michael Saylor. He is the original MicroStrategy shareholder, and his share of MicroStrategy's Bitcoin pot grows every time he's able to sell stock at a premium to someone else. So it's kind of funny. I said there's no free money in this situation, but for Michael Saylor, it kind of feels like there is, because he's turning the mania in his company's stock into a huge windfall for himself and other early investors. You know, if I was a MicroStrategy shareholder, I might even worry that Saylor is seeing too much success. With him making so much money so easily, he might start to feel invincible. And that's a very dangerous feeling to have when you're dealing with financial markets. It's quite possible that he could take on too much risk, borrow too much money, and put MicroStrategy in a very vulnerable situation when the next downturn in Bitcoin begins. He is raising a lot of money with convertible bonds right now. That could come back to bite him and the company down the line. I'm not saying it's gonna happen, but it's something to watch out for, especially when you hear the way Saylor talks about Bitcoin. He has this almost religious fervor for the coin that could cause him to make risky decisions that backfire in the future. So there you have it. That's my take on MicroStrategy. This is a fascinating company and stock that's closely related to Bitcoin, but has elements of being a meme stock and a cult stock as well. I'll have more to say about that in future videos. That's it for now. Be sure to subscribe, and I'll catch you in the next video.